All right, what's up, guys? As expected, quick breakdown of Friday's trade. The reason I wanted to do a breakdown on this specific structure is not that it's a structure that's gonna happen a lot, but when it does happen, it usually provides some good trades. So it's pretty important to spot them because um, they are not as easy to spot as, let's say, the typical structure where you have some wicks, let's say like these ones. Um, so what we had during the morning were these zones. So as I said, this zone was in purple because I was either was gonna wait for probably a fake out of this liquidity right there, and then if there would have been a closed below the 4,000, I would have probably took a short, but price decided to reverse before, so there was no trade for me on that, and I was actually waiting for either those zones or a break and then a retest of 4,000 to go further up. Okay, so now we had the 50 fib and the 61 fib zone that were a bit close, but both zones were good, so I decided to mark them both. Right. So let's forward a bit. So first candle, first reaction on our 50% fib. Now this is not enough to jump into a trade. A lot of you guys would have probably maybe think that it was valid to buy after that candle because we closed below that um, small zone, but since it wasn't on any fib, um, I didn't want to risk that much pips because you would have to enter maybe around there. Stop loss would have had to been around 43 pips, so a bit too much for me. Uh, Now all I needed to do was wait for a structure on the 50, so I needed at least two others candles on the 5 minute to close either bullish or gives us a nice reaction on the 50 fib. Then the next candle completely went through it, so now I'm actually waiting for that 61. Next candle though goes a bit before the 61, so I'm not counting it as a 61 touch, but more like a liquidity grab on the 50. Now the 50 still interests me because we are now back up above the 50 fib, so we have one touch. Then these two candles are simple grab manipulation, so I don't count them as touch of the 50 fib. So now what we need would be a typical retracement back to that 50, a reaction, and then another retracement around the 50 fib that's not gonna close below that first candle right there. Okay, so this was the pattern I was waiting for. So now you got the next candle, which was this one, perfect candle, doesn't close below that first one, perfect reaction on the 50 fib. Now I was interested to jump on the next candle. Okay, so all I needed to have was some type of reaction once again. Once I had this reaction right there, I decided to jump on the buy around, I think it was around there, but price decided to push right before I entered, so I got filled a bit higher. And then the reason why I didn't have to put my stop right below that was because those two wicks are manipulations wicks. All right, so these are not wicks that we should count in our stop losses. The initial wicks that didn't want to go further below and the initial reaction on the 50 was this one. So you got first touch, manipulation, second touch. Then this one, it was either a close like this or like a typical reaction on that and then doesn't go below that, or it could have been some type of like wick like this and then goes back up above. So maybe I got a bit lucky because I was a bit aggressive, but after those big manipulation, the price could go up really quick. Okay, so I decided to enter around there. As I said, it would have been like a 29, 30 pips stop loss, but I got filled a bit higher, so I was risking around 39 pips. Okay, so it was unfortunate. I would have been probably a bit pissed if I would have took the loss on that. But it is what it is. Maybe got a bit lucky. And the thing is, the candles are super big right now because the volatility is super high. But on normal conditions, it would have been probably something like a 20 pip stop loss or not more. Okay, so decided to enter right there. Where's my buy position? Right there. Decided to enter. It was around that level, I think. So something like that. My stop loss was right below those wicks. And then my take profit, pretty easy. I decided to try to snipe that 4,000 level. Now, if you would have waited for another candle after this one and not be a bit aggressive like me, it was perfectly fine, but you would have missed that entry. Sorry. Fortunately for us, for you guys, price provides another entry right after it. Okay, so we've had this nice little structure, okay, on that moving average and like retest of those wicks right there. So this, I almost took a chance and tried to buy with my stop loss right below this wick, but I decided to just let this one position be, as I didn't want to risk more money, okay, since it was Friday. But this entry was completely valid, okay. And now, thanks to the China and the Trump tariff thing, price decided to fly up, and I actually took my profit a bit higher than 4,000, so around 4,005. The reason I got out at 4,005 is not because of that high. Actually, I was in profit around there, but then when price decided to come back down, since it was an impulse trade because of a certain news, price could have went further down after that, after the initial reaction of the news. So decided to close 100% of my position when price came around 4,005, which was, to be honest, the right move, because yes, price went up, but then went completely down, so my runner would have been stopped out at break even. So I'm pretty proud of this one. So yeah, this was the special structure, as I may say. So hope you guys learned a thing or two from that breakdown, and we'll see you guys on Monday. Okay, so have a beautiful weekend.